This is Fintech Chatter, presented by Tier 1 People, leaders in Fintech executive search. And I'm your host, Dexter Cousins. In today's episode, I'm joined by James Foster, CEO of Ezypay. Ezypay offers subscription payments to businesses across Australia and Southeast Asia. I talked to James about the journey of the business, how it's pivoted, and how it continues to innovate to remain relevant and focused on customer solutions. If, like me, you love a good bootstrap story, then you're going to love this next 45 minutes. James, welcome to the show.
Dexter, a pleasure. I'm glad to be on the show. You haven't made it in fintech until you're interviewed by you, so I'm glad to be here.
Well, there you go, mate. Here's your moment, the highlight of your career. What can I say?
It's only taken us 25 years, but finally we've made it. The pinnacle of what we wanted to achieve at Ezypay is being on your podcast.
Well, we caught up in Intersect, and one of the reasons that I invited you onto the show is because I really wasn't aware of whilst I was aware of you as a business, I wasn't aware of the story. And it's such a great story and a different kind of narrative to the one that we hear all the time in the media about fintech. But before we talk about the kind of history of Ezypay, do you want to tell our listeners a little bit more about what you do?
Sure, and always a challenge to succinctly sort of define, what we do. And today, at least, and it's changed over the years, but we sort of define ourselves as a subscription payments platform. Supporting merchants that have an ongoing relationship with their customers, facilitating the collection, of billing. That's the easy way, and of course we'll explore over the podcast what that really means.
Yeah. So you talked about kind of the evolution of the business. Do you want to tell the listeners a little bit about the history of Ezypay and how it got started and the origins?
Yeah, sure. And in fact, it's actually great timing that we're recording this podcast because this month is our 25th anniversary. That's 25 years, not weeks or months. Wow. 25 years. And so we were started as an Australian business in Australia by our founder,
as old as PayPal, eh?
Older. And well, again, so, when we first started, we didn't use the word subscription. That wasn't cool. We were Australia's first direct debit company. And so, yeah, George Holman started the business and still owns the business. So again, if we're using cool modern terms, it's, we're a founder-led, bootstrapped scale-up. George doesn't think of it that way.
If he just said that 25 years ago, people would have thought he had too much to drink. Eh?
Yeah, exactly. And it's a classic entrepreneur story because it really started to solve a problem that George had. So prior to Ezypay, George was quite successful in the health and fitness industry. He ran a quite successful gym. And in fact, he's one of the first operators back then, again, we're going in a time machine to 25 years ago, to introduce pay-by-the-month memberships in the health and fitness industry. Of course, these days we just assume, well, of course, what other model is there? But back then, the majority of gym memberships were paid in full, as in you signed up for a 12-month contract or an 18-month contract or a 24-month contract, and you had to pay all of that up front. Yeah. That's crazy to think of now. And George was actually one of the pioneers in the Australian industry to introduce, a pay-by-the-month gym membership model. And his big challenge in that context was trying to work with, back then, one of the big four banks, because they were the only options, to be able to get a merchant facility to be able to facilitate direct debit payments. It was a nightmare. It was difficult. It was complicated. Hence why he formed Ezypay, and quite frankly, hence why we're called Ezypay, because back then, as it still is today, for a lot of small business owners, it's really difficult and complicated to be able to facilitate payments. And particularly with a subscription sort of business model, you just want the payments to be easy. You just want it to happen. You just want it to be, relatively automated. And so, George started Ezypay out of his little office in the back of his gym and started it, quite small, but went through massive growth. So again, traditional, he wouldn't have called it this back then, but had rocket ship growth, right?
Yeah.
So very huge growth. There was a huge amount of need, pent up demand in the market, and for the first 10 years of Ezypay's life, it was just strong acceleration of growth, managing all of those new inbound merchants, improving processes. And then, like most Australian businesses, George decided to expand into New Zealand. From a fintech perspective, very similar markets, very similar banking rails, very similar, regulatory environments. And so Ezypay expanded into New Zealand. At the same time, expanding our offerings, particularly from a vertical perspective. Our heritage is health and fitness, but expanding that into education, childcare, other industries that have that, subscription or ongoing relationship with their customers. Then, back in 2012, Ezypay launched our own health and fitness membership software platform called iConnect 360. You can tell that we released it back in the early 2010s because it's got a lowercase I in the front of the name and a 360 at the end of it. So it's a brand very of its time, but. Back then, our strategy, our understanding, we recognised that more and more small businesses, particularly obviously in the health and fitness space, didn't necessarily want to have a standalone billing platform. They wanted to start to see payments integrated into that sort of customer experience. If they've got a software platform that they're using to sign up a customer online or to, book their membership or, book their schedule, book their classes, payments, they just wanted to be an embedded part of that. At that point of time, Ezypay, we didn't see a lot of competitors in the market. There weren't a lot of people sort of delivering good value in that space. So we built our own software. And in fact, that was our first foray of international team expansion. We set up an office in Malaysia, in Kuala Lumpur to build that product and integrate it with our payment capability. And that iConnect 360 product really accelerated then our growth in Southeast Asia. So for the next couple of years, we then launched our billing capability as well as that, gym membership software capability in Singapore, Malaysia, Hong Kong, Philippines, Taiwan. We dabbled a little bit in China, but that really expanded the growth, quite significantly. One of the things, though, fast forward a couple of years, we then recognised that we recognise a couple of things. One, it's really hard to be great at two different things. We're trying to be great as a gym membership software platform, and we'll also be trying to be great as a subscription billing company. They were really hard things to do. And also, though, that requirement that we saw in the health and fitness industry was exactly the same in childcare. It's exactly the same in student management systems and RTO management software. It's exactly the same in property management. It's the same in every industry that we operate in. And, quite frankly, we couldn't build our own product in all of those areas. We didn't want to acquire. Some of our competitors have that strategy. They're trying to be everything to everyone. And so we made a really big strategic decision to instead of building our own capability, go down the platform path. And so we pivoted to, there you go, I'm using that word pivot. That does sound like we're
all right. You're entitled to after all those years, I think, James.
We slightly changed our direction and really doubled down our investment in the subscription billing space and built a brand new cloud billing platform from the ground up. Focused very much on integration partnerships. Although we had those in play, it was really a sort of a strategic intent to say, actually, we want to make this the core of our business, not on the periphery. We focused on building that platform, and we actually got to a point where we were able to sign up, for example, in the health and fitness space, so many partners in that health and fitness space is that we were able to announce the retirement of our iConnect 360 platform. We went out to all of our customers and said, hey, we're going to focus just on the billing. We'd love to continue to do your billing, but here's 10 partners that we have that you can choose from. And, we, in addition to them integrating with our billing, we've built migration tools and capability to move our customers seamlessly off that iConnect 360 platform to one of our partners. And that really accelerated, the current phase that Ezypay is in, which is really our partner-led growth. And so it's been successful for us in the health and fitness space, but it's also been really successful for us in other markets. And that really brings us, pretty much up to today. And in the last few years, we've continued our expansion geographically. A couple of years ago, we went into Thailand, and last year, actually in the middle of COVID, which seems a little bit crazy looking back on it, we also launched in the South Korean market. So that's my brief attempt of summarising 25 years in a couple of minutes. I'm sure I've left a few things out there.
So to kind of recap, the business it's still privately held, founder-led. It's been bootstrapped. You've been generating revenue. It's profitable, and that's been over a 25-year period. Is that right?
Yes, and it sometimes sounds straightforward, but as I found out, talking to lots of people at Intersect, that's actually pretty rare. So yes, very much from day one, we've been a profitable business. We've generated our own cash flow. We've reinvested into the business, and we haven't had to get any private equity or VC funding. And although we very much care about revenue growth, it's got to be profitable revenue growth, and that capability has fueled our expansion. So definitely still very much privately owned. I think there's some good and bad things about that, but we're still the masters of our own destiny and driving that growth ourselves.
So you talked about some of the kind of geographies that you're in. How many customers roughly do you service?
Always interesting, because we obviously talk about, what's the definition of a customer, but in terms of our merchants' customers, so the businesses that we're servicing, so the end people that we're billing, if you like. Yeah. Roughly speaking, in a given month, we're billing probably about 600 to 700,000 people.
Wow, that's a lot.
I sound blasé about that, don't I? It is. Obviously, there's quite a lot, and again, there's quite a lot of complexity. So that's spread across thousands of different merchants, as I said, across different industries. And it definitely ranges. On the one end, we've got really small businesses that are small single operator sole traders. We've got people that are running photography studios, or they're plumbers, or they're running their own little small business. We're supporting them, and they might have a handful of end customers that we're billing on their behalf, and that's why we've got our own standalone billing platform where it's really easy for a really small business to get on board. We don't charge any startup fees. We don't make it complicated to come on board. It's really easy to do so. Two, obviously we're supporting franchise groups that have hundreds of their franchisees that of themselves are small business operators servicing hundreds or thousands of individual customers themselves across multiple countries that we operate in. So we've got a broad range of quite small merchants to really large relationships that we manage.
Okay, and so how many people work at Ezypay?
It does change on a rapid basis, and we are growing at the moment, but approximately 60. So only 60 people.
Lean and mean still as well, then.
Yeah, very much lean and mean. Predominantly, about half of the team is based in Sydney, or technically Chatswood, and half of our team is in KL in Malaysia. We've got a couple of other remote workers. Even pre-COVID, before it was cool to work from home or work remotely, we've had a few remote workers on our team. We're very much focused on, at our heart, like a lot of other fintechs, there's the fin part, but the second syllable there is tech. We're a tech-driven business, and so at our heart is about building our platform so that we can scale to not only service that many customers and that many merchants, but be able to scale our solution to suit the countries that we're in as well. And so, yes, we're very much a lean business, but we lean into our processes and our technology to be able to do what we can do.
So the move that you've taken to the platform, it seems that you've kind of made it very, very simple for anybody who's got a business of any sort, whether that be an online business, to integrate the Ezypay kind of service and platform with their business. I couldn't help but think it was it's similar to the strategy that Stripe have followed, but you couldn't think of two very, very separate or different ways of, growing a business and making a successful business than Stripe and Ezypay.
I wouldn't mind having their valuation, and obviously George and I don't have an Irish accent, but it's actually an interesting differentiation. I think, notwithstanding the fact that we're obviously private and go under the radar. I think Stripe. You're right in saying that really when they aggressively came out into the market, they focused very much on that development persona and making it easy to integrate and having fantastic documentation. And those things are really important, and we've taken the same approach. The only thing that I would say is a little bit different there, though, as well, is we're focused very much on subscription billing, and it's inherently a lot more challenging than generic e-commerce. And again, I want to be careful. I'm not directly comparing us to Stripe or positioning what Stripe does or doesn't do, but they're very they've got a very broad offering. And if I make a generic statement about e-commerce or payment gateways, it is very much about, hey, we process a transaction. Here's our endpoints. Anyone can integrate with us. You can put our hosted payment page in your cart, and away you go. That doesn't work for us. The subscription billing model, at the heart of actually what we do, it's not about processing transactions. It's about helping our merchants collect the funds that they're owed. And it sounds a little bit weird in that context, but even in Australia as a mature market, without a solution like ours, we see the average collection rate for merchants hovering about the 85% mark. And what we say by 85% is these are businesses that are actually already providing the service to their customers. They've got a gym member coming to the gym, or a student attending their training course, or someone that's to consume their product. So they've already given the product away, and now they're trying to recover those funds. And only getting 85% of what you're owed is shocking, right? It's a huge problem. And so for us, processing the transaction is one of the easiest parts of what we do. And so a lot of what we do is about how do we optimize the transaction. We've got automated retry, rebilling. We optimize when we attempt the transaction. We optimize the automation of communicating to end customers when a payment fails. We can handle multiple payment methods. There's a whole bunch of things we do. And why I'm positioning that is actually what's really critical to get right is the business process. And actually the biggest challenge for us when we work with our partners is not the technology or our APIs. It's working with them on, hey, what's the right business process that we've got to jointly enable so that our joint business customers, the merchant, can actually leverage that outcome. And so, again, coming back to that generic example with Stripe, our strategy is we don't want to go after lots and lots of integration partners. We don't want to scale in that context. We really want deep and rich partnerships. Now, don't get me wrong, we want more of them, but our partnerships really need to be really strongly connected, because if they don't leverage our platform the right way, that actually disadvantages Ezypay, right? Not only their customers and themselves, but, we're really joined at the hip with our partners in terms of how they leverage our platform and how we work together. And look, I know everyone in the market often talks about partnerships, and partnerships are really important, but it really is for us. It's not just a channel partnership that we think of. It's not just a way of scaling the number of transactions on our platform, which is, again, what a lot of other sort of platform providers look at. It's actually technically holistically speaking about, creating a unique integrated solution. So in one way, instead of saying, hey, I've got a single platform that my partners use, actually the reality is I've got 50 separate solutions, because every time a partner integrates with us, it's a unique solution that we jointly take to the market.
Yeah, and they're so complex as well, partnerships.
Yeah, that's an understatement. Yes, but that's where there's the reward that comes from that. But yeah, it's a lot of hard work. It is a huge amount of work to get right.
Now, I can't help but think the whole world's gone through, kind of the biggest upheaval we've probably all faced in our kind of lifetimes with COVID. And gyms, schools, universities, daycare, all of these clients that you've been serving have been massively impacted. What kind of challenges that thrown for Ezypay, and how have you dealt with that, James?
Yeah, no, it's obviously a question I do get asked quite a lot. And you're spot on there, Dexter. I think pretty much, if we go back to the start of the initial lockdowns, nearly the majority of our merchants were impacted. As you mentioned, gym shut, face-to-face training shut. So a significant portion of our merchants just stopped trading overnight. And even though we're in 9 markets, if I look back to sort of April last year, eight of the 9 countries that we operated in all had lockdowns at exactly the same time. So it was pretty challenging for us. Again, just purely from a cash flow, from a managing our business, ensuring we could survive. And I know lots of other people talk about this, obviously, and I can look at it on hindsight. It does make you a stronger business, because it makes you very much more aware of your balance sheet and your cash flow, and what expenses you really need to pay and where your costs come from, and so those things were definitely challenging.
You didn't have a VC you could go to and ask for a handout as well.
Yeah, correct. But again, that's sometimes also good, because it's not making you lazy in that regard, or it does very much focus you on that outcome. The other really interesting thing, though, for us, and I thought at the time it was self-explanatory, is we wanted to really make sure we were supporting our customers through a really difficult time. So I can say, oh, geez, we went through a difficult time, but, we talk about partnership, but our model is fundamentally intrinsically tied to our merchants. If they're not using our platform, we don't make any revenue. So clearly, that means, they've got no money coming in the door either. And we wanted to really make sure that we could support them the best as possible. So, that was a range of things. We worked, for example, in the health and fitness space. We worked with a lot of our partners to encourage our joint customers, where possible, hey, could they pivot to outdoor training where that was still allowed? Could they move to online training courses? Could they offer some sort of hybrid model so that we're still generating some revenue? So we focused very much on, supporting them. We beefed up, we made sure that our customer support teams were ready to sort of handle the onslaught of additional support that our merchants needed. They needed to suspend billing. They needed to change billing instructions. And I sort of point these things out as self-explanatory, but the reality is some of our competitors in the Australian market took the complete opposite approach, because another way to look at it is about risk management. There's a big risk event going on. As a payment facilitator, as a payment processor, we hold the chargeback risk. So there's definitely a risk conversation that says, if some of these businesses don't open their doors again, there's a bit of risk exposure. And I say, unfortunately, I think for the market, for the industry, some of our competitors took the really risk-first approach to suspend billing against all of their customers. So they hit the big red button and said, we're not going to bill anyone. You've got to prove that you've got a valid reason. And that was just really, I think, a bad decision for them. As it turns out, obviously, as I'm telling you the story, it's a great decision for Ezypay, because what we saw happening then as things started to get better, particularly in the Australian market, is those merchants, realised that their service providers weren't supporting them, weren't there to help them out, and so we saw a lot of merchants coming across to us after COVID, and that's actually an interesting point, because subscription billing tends to be a bit of a sticky business model. There's a bit of a cost to change, so that was helpful for us, I think, in terms of doing the right thing by our customers. Also, though, as well, we saw, and you see more generically, yes, that push to be able to service customers in different ways. In some industries, we definitely saw a drive and an increase in volumes. Education is a really good example. We've got a pretty good footprint in the education sort of sector. A lot of education providers, though, traditionally pre-COVID would be face-to-face. Even if they were offering, say, a 12-month course, they would prefer cash up front. It would be a single transaction. They often wouldn't do it digitally, or they would do it very simply via, an EFT and a transfer. Yeah. And there was no imperative to digitize. And so similar to, more broadly e-commerce and retail and all of those other conversations, and, why platforms like Square have done really well during COVID is in some of those sectors, we saw a lot of those providers realize, oops, they've got to pivot to online training. They've got to understand their customers are in financial stress. They've got to offer pay by the month. They've got to offer different solutions. And so we've also seen a great uptick in some of those segments in terms of growth in those verticals as well. So definitely lots of silver linings, I think, on this side of the fence. Having said that, what I would say is we are in 9 countries, and even though, and as we're talking, Dexter, there's obviously the new lockdown in Melbourne, and still things aren't great in Australia. Comparatively, though, markets like Australia, New Zealand are doing much better than, say, markets that we operate in, like the Philippines and even Malaysia. They're still going through some very, very tough times, and we're still seeing some really challenging situations for the businesses that we serve in those markets as well.
One of the other challenges that we're seeing, this throw up is obviously the remote working side. You mentioned earlier that you've been, as a tech business, had a heavy element of remote in the business way before COVID. I get a lot of questions, and I think a lot of the discussions that I have with leaders is, I think 12 months on, James, we're starting to see now the kind of, the long-term implications and challenges and impacts on business performance of having a highly dispersed team. How do you keep people motivated when you got a 30-minute Zoom call every week? How do you keep the culture going? How do you get how do you get those serendipitous moments where you got a team together in one room and, somebody has an idea and you run with it and it creates a new business? What has been your approach to building a culture, working remotely, and kind of what are some of the things that you've learned?
Yeah. Look, I don't have the magic bullet, and I think it's a good, healthy
Nobody
debate.
Does.
There's definitely strong opinions on, one, if you operate a telecommunications platform versus a real estate company, you're going to have, very biased opinions potentially on the future state of that. What I would say is, again, pre-COVID for us is, as I mentioned, even when we had teams together physically, say in our Sydney office and our KL office, they were still remote from each other. So we always had this challenge of how do we make sure when there are people in different time zones or different physical locations, how do we ensure that there is engagement? And, so even pre-COVID, everyone working from home, that was still a bit of a challenge. And, again, I think part of it is, how do we make sure we're communicating? How do people feel like they're contributing to the success of the business? That's a really important one. And I know lots of people talk about it, but you can never do enough of that. I think, one of my lessons learned, when we, at the height of the lockdowns last year, I moved to a daily all-staff meeting. So we had a daily briefing every single day for our entire team where I'd give them an update. Some of them were incredibly brief. I didn't have much to say. And although I did that out of necessity, it was really interesting to see just the strong feedback that we had from our teams about how positive that was. Even though it was a really challenging environment, everyone was really appreciative of the transparency, communication, understanding where we're at with things. And so you can never communicate enough. And I've got a really strong focus internally on, again, as a fintech, using digital platforms. We are ultra transparent internally. People know where we're at, what our revenue numbers are, what our costs are, who we've signed up last week, what the health of the business is, what our key KPIs are. Everyone can see, everyone else's, core KPIs and how we're tracking as a business. And so I think that's incredibly important. But that being said as well, to your point, it still is important for people to get that human interaction. We also had a really strong culture pre-COVID where we would get our teams together, physically to celebrate success and to engage as people. And, we're definitely seeing a really strong desire from our teams to have more of that again. And we've been recently doing more of those events. And obviously,
you've seen the impact at Intersect, right? Last week of just getting people together in a room.
I'm going to say this the pent-up energy and excitement of, that face-to-face engagement. And so it is. Look, it's got to be a blend. I don't think it's one or the other. It's a combination of both. I think things do change, but it is about balancing that out and understanding what people need and being able to communicate and engage with them. And because you talk about culture, I think for us as well, even outside of the disruptions that we've had with the pandemic, it is about making sure people feel like they're a part of something. And that's actually the great opportunity we have, coming back to the fact that we are only 60 people. We're a really complex business. We're doing some really amazing, interesting things, but we're not a huge organization. So people coming in can really directly see the impact they have. And to be honest, that's both a good thing and a bad thing. When we have great A players come on board, it's amazing. They have such a huge direct impact. But also sometimes when we make the occasional mistake in hiring and recruitment, it can drag the entire team down. And there isn't anywhere to hide in a 60 people organization as well. But for the right people, and when they're aligned with our shared outcomes and what our goals are, and we're clear as a company about what we're expecting out of people, it's a fantastic place to be.
Yeah, it's a great point that you make, and that transparency that you mentioned. It's not for everyone, right? And it's it's kind of confronting being in an environment where you got 60 odd people and there is nowhere to hide.
It is very challenging. I think, and obviously, I'm talking to you, and you've got great experience in this and an understanding is, in an interview, if you ask somebody if they're keen to come in and make a difference and work in this sort of environment, everyone will say, yes, of course.
Yeah, I've never heard anybody say no.
People aren't going to go, no, actually, I just like to plod along and I'd rather work for a 10,000 size organization where I can be a small cog in a big machine and hide away. And, no one's going to say that. And it is sometimes really hard to assess people that really understand that, which is why as well in our recruitment process we're always very brutally transparent about the challenges that we've got and the problems that we have, and again the right candidate doesn't see that as a problem or as a constraint, but as a really interesting problem to solve. We've got some fantastic problem solvers, and again, the right person sees that, as you were talking about, when I lay out the fact that we're operating in 9 markets across Asia Pacific, some of them with really challenging regulatory environments and technical complexity. Some people go, oh my God, that's just, whoa, that's so messy. How, other people go, that's amazing. I'd love to sink my teeth into that sort of problem. And those, and then again, that's also the advantage, coming back to how we define ourselves, I often refer to us as a mature startup because we're not a large organization. That 60 people mean that we can make decisions quickly. I don't have, I've got to talk to George on a regular basis, but we don't have, a VC that I've got to run to and ask for permission necessarily. We don't have a complicated board structure or, a really long drawn out decision-making process. So we're like a startup in the context we can make decisions quickly and we're not a large team. But unlike a startup, we're mature. So that means that, we know what we're doing. We've got some stability. We've got experience on our side. But also we've got the scale of complexity. So we've got some really interesting problems to solve. And again, for the right person, it's not for everyone, but for the right person. And obviously, as I'm talking to you, that includes me. I love being at Ezypay. You're like you're a kid in a candy store. It's just, it's a great place to be with these sort of challenges and complexities, but the ability to move pretty quickly and go, actually, geez, that was a bad decision. Let's move away from that, or let's have a bit of a crack at this and see what we can do. Absolutely.
Well, as you know, James, in fintech there is a lot of sizzle, and I kind of haven't spoken to you and heard your story and talk about your hiring process as well and the way that you go about bringing people into the business. It sounds like if people have had enough of sizzle and they want steak, then you guys have got the steak.
That's an interesting way to put it. The sizzle versus the steak, and
we've all got to eat, right?
And you're right. I think there's in terms of recruitment, again, there's not necessarily a one size fits all for us. We definitely have, and again, it's really interesting in that scale of 60 that I talk about, is that we actually do quite a lot of internal employee development and learning and development and growth. And, we've got people that join our customer support team, and then they go into our application support, or they go into our engineering team, or they join customer support and they, join our inbound sales team, and then they become an account manager and manage some of our, larger merchants. And so interestingly enough, there's that growth for people coming in that are new and want to learn. By the same token, we also get people to your point that are, either sick of the sizzle or are frustrated in larger organizations where they can't get something done as well. And, we have a lot of people that sort of have, worked, for example, for the Big Four or for one of the large card schemes, and, like the industry and want to get stuff done, but, maybe they're not a culture fit, or conversely, they've done that and decided they want to go on a startup, and they've worked for a startup out of someone's basement and realize they don't like, screen printing their own T-shirts, or or getting let go after a couple of months when when there's a significant pivot to something else. Again, I know I'm being a bit tongue in cheek there, but again, for us, it's that we're in that middle space, and there is that substance.
Awesome. No, we did catch up at Intersect last week. There's a lot of exciting stuff that seems to be going on. Is there any fintech business out there other than Ezypay, of course, who has got you excited?
What was great to see at Intersect this year is more of a conversation about payments. So, if I look back on the last maybe 4 to 5 years, I recall, like at the first Intersect, it goes through themes, and there was a bit of a theme about business lending. Business lending was a big topic of conversation, and there's, the Prospers, going out there and doing well. And so there was a lot of conversation about, disruption in the lending space. And, then, obviously we get the broader trends of, crypto and blockchain and, AI, and that they're pervasive sort of trends. Obviously in the last couple of years, buy now, pay later, for obvious reasons, has been on everyone's radar and a conversation. And what's been interesting for me, obviously, as someone in the subscription payment space, is that I realized that, one, payments was often not talked about at all because it was just assumed it's like concrete, it's infrastructure, it's boring, it's bland, it's just there, it's a commodity, there's no innovation. And when it was spoken about, the innovation is always about point of sale. So, it's about wallets, it's about NFC, it's about QR, it's about omni-channel retail experiences. And don't get me wrong, they're all really valid, things to talk about. But there wasn't a lot in the sort of card not present digital payment space. And And actually, I've seen a really big change, or I saw a really big change at Intersect this year. There are a lot more people talking about payments innovation. You know, and that's obviously driven by some firms, you know, being really successful and or branching out and doing some really interesting things. You know, again, it's been really interesting for us. You know, obviously Assembly's success and what's happened with them, and you know, the stuff they're doing now out of Singapore with Standard Chartered actually drives a little bit more interesting, you know, conversations of, you know, what a platform payment sort of environment looks like. And again, to the point we talked about, Ezypay flying under the radar, often people are asking us more about what we can do. I'm like, yeah, we can do a whole bunch of those things as well. So it's interesting to see more conversation going on, you know, with payments. You know, the other one I'll throw out there as a bit of a curveball, and they probably won't expect me to name check them, is the likes of Cuscal. And I know you've interviewed Cuscal on your podcast before. You know, increasingly, there's always been this challenge with fintechs, especially in the payment space, of being reliant on the big four. And obviously, there's always an issue of access. You know, and again, I was in a number of roundtables at Intersect, and, you know, we talk about NPPA. You know, there's conversations about FPOS Digital, and there's always this question or concern for fintechs about access to these platforms, to these rails, to the schemes, to, you know, to the core payments infrastructure. And I think hopefully what's starting to change is that there's a recognition by some of these other non-bank, if you like, payment providers, and Cuscal is one of them, that there is a whole ecosystem of fintechs that they can actually service, and there is this market here. And you know, obviously, you know, keen to see what Cuscal continues to do and innovate and support the fintech ecosystem, and more increasingly, hey, if there's even more competitors to Cuscal and what they're offering, it's actually going to be great for the broader fintech community.
Absolutely. And you're spot on, James. I mean, it is such an exciting time for the payments industry. So what do you think we can expect from Ezypay in the next 12 months?
Oh, this crystal ball time. So I'm sure someone will play back this podcast in 12 months' time. There's a few things, obviously, that we're working on. You know, coming back to what I said before, we're really seeing some great growth in the types of partnerships that we're forming. You know, we keep bringing on board some really great partnerships, you know, every week, both in the industries that we're already in, but also in some exciting new industries that we haven't necessarily played in before, and that have been a little bit stale, you know, when it comes to payment innovation. As a sneaky preview there of some of the things you'll see is that we're doing a lot more in the rental payment space. You know, that's a classic industry that just has not innovated payments wise for about 35 years. So there's a lot more partnerships that we're doing in those industries. So that's, you're going to definitely see. We're very much leaning into our technology investments, and that's the great thing as well. Payments continue to evolve. I just name dropped two. So, you know, obviously the work that NPP is doing with now called Pay2, the mandated payment service. You know, our goal is effectively to be live on the Pay2 platform on day one, whenever day one happens to be next year. So, you know, that's definitely something we're working towards. We're adding new payment methods all the time, not only in the Australian market, but across a number of the geographies that we're active in. And we're also, you know, constantly releasing really new innovation in that improving collection outcomes. So without naming what's coming next, you know, as an example, we were one of the first you know, PayFacs, payment facilitators of our type in the Australian market to go live with MasterCard with their network tokenization capability. And that sort of innovation for us is really important because it helps merchants, as I said, improve those collection outcomes. It makes it easy for them because it's transparent. They don't see the magic that we're doing behind the scenes. And there's a lot more of that tech innovation that we're building on. Even though we're a 25-year-old business, we don't rest on our laurels, and we're quite aggressive when it comes to, you know, building new tech and continuing to improve our platform.
Well, James, I love a great bootstrap story. And I got to say, to have one on the show that's 25 years old, what a great example to show other founders out there that, hey, look, there's so many different paths to success. It's been awesome to hear about the Ezypay story and all the cool stuff that you're doing and how you're kind of continuing to innovate and not resting on your laurels. But where can people find out more about Ezypay?
Good question. Pretty easy to find us. It's on our website, ezypay.com, EZYPAY.com. And obviously anyone listening to the podcast always can hit me up on LinkedIn, James Foster, or follow us on the LinkedIn page. We do put a little bit of content out, and we're trying to do more of that as well. And of course, always happy to that last point, Dexter. I think what I'm keen to do more of is share back to the fintech community as well. You know, I'm not saying we've got all of the answers, but we've got lots of little scars and experience from what we've done and how we've done it. And I'm always happy to share to any founders or anyone in the fintech space that's interested to understand more of our story. You know, always happy to have either a real life face-to-face coffee or even a quick Zoom chat as needs dictate, based upon whether or not we're allowed to.
Yeah, awesome. Well, James, thanks so much for joining me.
Always a pleasure, Dexter. Thank you.
And you can connect with me, Dexter Cousins, on LinkedIn and Twitter. For early access to new shows, subscribe to our newsletter by visiting the Fintech Chatter page on LinkedIn. Thanks for listening. If you enjoyed today's show, please consider leaving us a review so we can bring you more great guests like James and help more fintech fans like you discover the show. Fintech Chatter is presented by Tier 1 people, leaders in fintech executive search. We'll help you launch, scale, and innovate by delivering world-class talent. And you can find out more at tier1people.com. Until the next episode, stay safe